Hello and welcome to another video. Please remember to click the subscription button. Kindly subscribe to the channel. Alright, today we'll be looking at a strategy you can use to trade Volatility 75 index. I have V75 on 1 minute time frame on my chart, and I have 5 windows. Now the first window is the main window. This is my main window. Okay, now the second window is indicator window 1. This is indicator window 1. The third one is indicator window 2. This is indicator window 2. The fourth one, indicator window 3. This is indicator window 3. And the fifth one is indicator window 4. This indicator window 4. All right, we are still on the 1 minute time frame. Now let's look at the way this strategy works. Before we go ahead, let's look at the settings. The settings on the main chart, I have fractals. I like to use fractals on my chart. Fractals helps me to identify the point of price rejection. You see, price will move, and at some point it will be rejected after meeting some level of force. Okay, the level of force could be a force of resistance or a force of support. Okay, now if price is going up and fractal is formed at the top, and you can see an arrow, fractal arrow pointing upward, that means price may fall or reverse or shift downward a bit. But if price is going down on your chart and the fractal arrow is formed pointing downwards, that means price may rise up a bit or reverse or retrace. So fractals helps a lot in identifying point of support or area of support or area of resistance. It could be a minor support or a minor resistance, or a major support or major resistance. So I like to put fractals on my chart all the time. All right, still on the main chart settings, we have fractals and some moving averages. Now the first moving average on the main chart, we have 42 period simple moving average. The shift is 0. Apply to close, color is black. Then the second moving average, we have 38 period simple moving average. Shift is 0. Apply to close, and the color is purple. And the third moving average, I have 200 period simple moving average. The shift is 0. Apply to close, and the color is blue. And the fourth moving average, I have 25 period lightweight moving average, and linear weight moving average. Apply to close, shift is 0, and the color is red. Then the fifth one is a 40 period simple moving average. Shift is 0. Apply to close, and the color is green. And the sixth one is 20 period linear weight moving average. Apply to close, shift is 0. The color is orange. So we have 1, 2, 3, 4, 5, 6 moving averages, then fractals. So let's go to the main chart and try to see the application of the moving averages to generate signal. Now the way it works is that when the orange and the red line, when they cross above the green, purple, black line like you have around here, you have your buy signal. But when all the lines cross above the blue 200 period simple moving average, you have your change of trend. Like here we have a change of trend to bullish trend. All right, let me take it again. If the red and the orange line cross above with price cross above the green, purple and black lines, all right, you have your buy signal. But if all the lines, I'm talking about the red, yellow, green, purple, cross above the blue line, which is your 200 moving average, you have a change in trend from a bearish trend to a bullish trend. Okay, let's continue to back test. Now here we have the red and the orange lines. The two lines cross down the black, blue, black, green, and purple lines like you have around here. This signal for you to sell. Okay. Now if the orange and the red line cross above the green, black, and purple lines, that's a signal for you to buy. Okay, cross down. You have a cross down here, signal for you to sell. If it crosses up, like you have a cross up here, signal for you to buy. Cross down, like you have a cross down here. Okay, sell, cross up, buy. Okay, we have range. This is a range formation. Okay, like a cross up around here. Buy to buy. Another cross up. Buy to buy. This is a cross down. Buy to sell. Okay, this is a clear cross up for you to buy. But before then, we have the red, orange, green, black, and purple lines crossing down on the blue line for us to have change of trend to bearish trend. And you can see what happened. Price continue downwards. Okay, let's look for bullish trend change. Now here you have a bullish trend change where all the lines crosses above the blue line. Here you have a bearish trend change, but it did not last. Okay, and the bullish trend continues. All right, here we have a bullish trend change. Here you have a bearish trend change. Okay, let's continue. Now here's a bullish change in trend. Okay, I can see the line stayed above the blue line. Stayed above the blue line, continued upwards. Okay, until it changes at that point. Sorry, excuse me. Okay. Continue upward until it changes direction around here. Okay. So that's that for the trend change. Okay. Let's look at, okay, we have the bearish somewhere around here. Okay, this bearish trend change. We are looking at the 1 minute. We are analyzing how this strategy works on the 1 minute time frame. So if all the lines cross down on a blue line on 1 minute time frame for volatility 75 index, they cross down just like we have at this point. Then you have your bearish trend development, and price went down. Let's look at the depth at which price went down. Okay, let's assume we place our sell trade. Let's assume place the sell trade somewhere around here. Just a minute. Okay. All right, we place it at 739,321, and the trend, bearish trend, started at that point. Down, until we have another trend change somewhere here. Let's see, we enter this for this trend change around here. 7077664 from 739,321. Okay, up to 70. That's like that's like 30,000 points. Okay, plus or minus 30,000 points. Okay, now we have another trend change somewhere around here. This is where we have the other trend change. Assume the line crosses. Just a minute. I want to do some measurement. Okay, let's assume that we place our buy trade after all this line cross above the blue line here, around here. Let's assume we place our buy trade somewhere around here. Okay, let's assume we start to buy somewhere around here. Just a minute. Okay, we assume we start to buy somewhere around, so place our buy here. Okay, 710101. Okay, and bullish trend started and continued up to somewhere around here. Okay, where we now have trend change. Okay, we have a trend change here. So let's say we close our trade somewhere around here when the trend change is confirmed. So we have from, let me remove this. Okay, we are from trying to calculate the amount of points from 710101 up to up to 754, like 40,000 points. All right, for us to have the trend change before we could have trend change. So on the 1 minute time frame, looking at the main chart, backtesting on the main chart, you can see that when you have trend change, you can get some amount of pips or points by following this strategy on the main chart. I'm saying by following the trend change, like you have a bearish trend change development here. Okay, the price starts to sell. Let's assume all the lines cross down the blue line, and it's confirmed somewhere around here that all the lines have crossed down the blue lines, and you place your trade. Let's assume place your trade here. Okay, so in line with this strategy on the main chart, if you place your sell trade, if you sold around here, anywhere around here, or let's assume you sold on the breakout of this low, which will be somewhere around here. All right, let's look at what happened. Oh, we have another trend change. So if you sold around here, which is a breakout of the low, your stop loss should be somewhere around here, which is the high, the closest high, or the closest resistance. Okay, and if you are going to use this strategy and you want to buy, okay, your trend change will have been confirmed somewhere around here that all these lines have crossed above the blue. All these lines have crossed above the blue line. Okay, so assume you place your buy above, the high, looking for breakout. Evidently your trade to trigger your trade entry somewhere around here for you to buy, and the trigger will happen here on the breakout here. So if you bought, you can see price went up to an extent. So your stop loss will be the nearest low, and your nearest low is somewhere here. It's your nearest low. Okay, you can see what happened. You have made some points. You bought here, price dipped, you bought around here. Okay, and price went up and dipped. We didn't get to our stop loss area. Now this is our stop loss area. This particular area is our stop loss. I didn't get to our stop loss, it dipped, then continued upwards up to this point, and also dip and continue upward up to this point until we have a trend change. Okay, so you will have taken your profit somewhere around here where the trend change is confirmed. Okay, so that's about how you can use this strategy on the main chart, following the trend change or the trend developments. But for signal, obviously, when the red and the orange line cross above the black and blue, the black cross above the black, purple and green lines like you have around here, that's your buy signal. And cross down, your sell signal. Cross up, buy signal. Cross down like you have a cross down here, sell signal. Now if you are going to trade based on the crossing of the yellow of the orange and red lines on the green, black, and blue, the green, black, and purple lines. If you are going to trade based on the signals, like this is signal, we have a signal here. All right, your signal will have been confirmed somewhere around here. Okay, it have been confirmed that you have a crossing around here. So if you enter your trade on this line, you can enter your trade here. You can enter on breakout. Let's assume you enter on breakout, which breakout will be confirmed somewhere around here, breakout of the low. All right, that means you place your trade somewhere around here, where the price broke down on this level. So assume you place your trade, sell trade here. Your stop loss will be the nearest high. Okay, nearest high after the trade generation somewhere around here. Place a stop loss. Okay, all right, and price went down up to somewhere around here. Okay, of course, when price, you don't forget you took your trade. Just a minute, let me remove this. You took your trade somewhere around here. All right, and your stop loss, just a minute, I want to remove the unwanted shape. Okay, your stop loss is somewhere here. All right, and you placed your sell trade here after the crossing. You can place your sell trade around here, but you can wait for a breakout of this low and place it somewhere around here where the breakout is well pronounced. Okay, now price went down and came up. Okay, and continued downward. All right, so you can always use trailing stop to protect and lock your trade. All right, if you place your sell trade somewhere around here shortly after you have confirmed that let's assume you confirm that the red and the orange line cross down the green, black, and purple lines around here, and you enter your trade somewhere around here, anywhere around here, then price continued downwards, rose to this point and continued downward, and you can always place trailing stop, can move stop loss manually to protect your trade. You can follow price with stop loss manually to protect your trade. So that's that for the main chart. Let's quickly go to how you can use this strategy how you can use the signal generated on indicator window 1 to trade volatility 75 index using this strategy. Now these are indicator window 1. All right, it's simple. When the red and the gray lines, let's go to settings first. Indicator window 1. Now indicator window 1, we have MACD and moving average. The MACD setting, we have fast EMA is 5, slow EMA is 18, MACD SMA is 5. Apply to close. Now the main style color is green and the signal style color is black. Now there's a moving average on that indicator window. We have 1 period, linear weight, shift is 0, applied to previous indicators data, and the color is red. Now let's go to the chart. When the red and black line cross above the 0 level, like you have around here, is your buy confirmation or buy signal. When it crosses down on the 0 level, that's a sell confirmation or sell signal. When it crosses up, buy. When it crosses down, sell. All right. So let's also look at indicator window 2. Let's look at the settings for indicator window 2. You have stochastic oscillator. You have Ichimoku, Kinko, Ayo. And then we have moving average. For the stochastic oscillator, let's look at the settings. The percentage K period is 1. The percentage D period is 1. And the slowing is 1. Price field is close on close. Method is exponential. Now the star color for the main and the signal will match the background color of the chart. And the levels, let's look at the levels. We have 20 and 80. Color is black. Now that's for the stochastic oscillator. For the Ichimoku, let's look at the parameters. You have Tenkan Sen to be 8. Kijun Sen to be 8. Senkaku span B to be 52. Only the color of the up Kumo and down Kumo will be blue. The remaining colors for the Tenkan Sen, Kijun Sen, and Senkaku span will match the background color of the chart. Now, apart from stochastic oscillator and Ichimoku, Kinko, Hayo, we also have one moving average. Now, the parameters is 1 period. Method is linear weight applied to weighted close. Shift is 0 and the color is red. Now, let's go to the chart and look at the way it is being applied. Okay, on the chart. Okay, let's move to where I demonstrated for okay, here. Now, when the red line crosses above the Ichimoku indicator, like we have around here, it's a buy signal. When it crosses down on the Ichimoku, sell signal. When it crosses up, buy signal. When it crosses down, sell signal. When it crosses up, buy signal. So another way to look at this particular indicator parameter, or another way to use this particular window, I'm talking about indicator window 2, is when the red line touches the Ichimoku from above, sell signal. When it touches it from below, like you have around here, buy signal. From above, sell signal. And touches it from below, buy signal. That means from below it touches it first for you to have buy signal. Then when it comes out on the other end, that's your buy confirmation. Okay, same thing with the sell. When it touches it from above, sell signal. When it comes down from the other end of the Ichimoku, like you have around here, sell signal confirmation. So that's that for indicator window 2. Now let's go to indicator window 3. Let's look at the settings. For indicator window 3, we have just average directional movement index, ADX. Now the parameters, we have the period is 14. Now the color of the style is red, while the color of the plus D and minus D style will match the background color of the chart. Now for the levels, we have 26 and 25, and the color is black. Now let's look at the way the signal is generated for this particular indicator window. Now, when the red line crosses above or enters between the 25, 26 level like we have around here, that means get ready to trade. Okay, because price is going to move out of range. Okay, this is another example. Get ready to trade, get ready to either buy or sell, because price is preparing to move in a trend or in a direction. Price is preparing to move out of range. That's the implication. When I'm saying when the red line drops below 26, 25 level and then comes above or comes up to touch or comes between the levels in preparation of going up, that means prepared to either buy or sell, because we are going to have volatility. This means prepare to place your trade. All right, we'll have volatility. Okay, now here we have it staying for a long period under the 25, 26 level, and on the main chart you can see range. It means stay out of the trade. We have range, which means we are in range. The price is ranging, not yet ready to buy or sell. And you can see what's happening here. Range. Okay, but by the time we have a touch here and the red line goes above, you can see what happened. Range break. All right, but it didn't last long. Okay, but here we now have another rise above, and we can see what happened on the main chart. Price fell. All right, so that's basically how to use indicator window 3 to know when to place your trade and to know when to stay action because of range. Now let's go to the last indicator window, which is indicator window 4. Let's look at the settings. Now for indicator window 4, we have relative strength index and 5 moving averages. Let's look at the parameters. For the RSI, we have 1 period, apply to close. Now the color of the style is black. Now let's look at the levels. We have 20 and 80, and the color is black. Okay, now we have 5 moving averages. 5 moving averages. The first one, this is the first one, 200 period simple moving average. It's applied to close, and the color is red. Okay, we also have 7 period moving average, simple moving average, shift is 0, apply to close, and the color is blue. Then we have 6 period simple moving average, shift is 0, then apply to close, and the color is purple. Then the fourth one, we have 8 period simple moving average, apply to close, shift is 0, and the color is orange. And finally, we have 5 period simple moving average, color is green, apply to close, and the shift is 0. Now let's look at how the settings work, how it works. Now when all the lines cross down on the red line, like you have around here, that means sell. Okay, so when all the lines gets below the 20 level, like you have it below the 20 level around here, that means price has hit the support and may go up, as evident on the main screen, on the main chart, support and may rise. Okay, so that's basically how to use indicator. Like you have a cross down around here, which means sell. All right, for you to use this particular indicator window, talking about indicator window 5, you need to zoom out completely. Don't forget, zoom out completely so that you don't have repaint. You don't have much repaint. Okay, so like you have a cross down around here for you to prepare to sell. You can see what happened on the main chart. More like a replication of what's happening on indicator window 4, cross down to sell. So for when it crosses above, let's find the situation when it crosses above. Okay, like you have a cross above here, you have it crossing above here, whereas the red line also goes below 20 for you to buy. Then when you have it crossing down, let's look at where we had it crossing down. Okay, like we had it crossing down here. All right, that means the indicators went above 80 and then turned down. That means you can sell. That means you are in overbought position or resistance and price fell. Price is expected to fall. And that's exactly what happened. So that's that about this strategy. The combination of all signals on all windows will give you a perfect sniper entry, trade entry. Okay, except for the indicator window 3 that tells you when to trade and when not to trade, when to expect a trend and when to expect a range of price. So I want you to subscribe to our channel. Click the subscription button, click the like button, like the video, ask questions, state your question below the video, and also click on the bell button below the video for notification. Till I come your way next time.